Welcome back to the Epic Spectre. In today's episode, February update, weekly update, and we talk about the S&P 500 as well. Hi, this is me. Well, not really. But these are my accounts. The personal for 20k, 25k verification with Fidelcrest, and one with 250k with E8 funding. And this is my journey to become a $2 million funded trader. Let's begin with the February update on the personal account. As you can see, not much has changed this week and we closed the month with 13%. Could it be better? Sure. Mistakes were made, but I think what's important is to learn from them and improve. Let's continue with the weekly update. We did pretty well, I reckon. We are up 4.62% for March. It was a fairly good week on the personal account. Status update on the 25k Fidelcrest account, we are up 1% as of today, while on the E8 account I managed to go my way back up, so now we are only down 1%. And after all that, let's jump into the charts, shall we, because the S&P 500 was quite interesting this week for me. I remember telling you in the last video that I actually closed my existing shorts. The reason for that was that we actually approached a trend line that I drew before, and I thought that the trend will slow down and eventually will stop, and I was correct in that. Then after a few days I noticed the trend actually stopped, and I started taking long positions, especially when we dipped below my trend line but started generating bullish engulfing candles, and I started riding that wave up. However, on Friday I made a mistake and closed everything early. And if we switch over to TradingView, I tell you what my reasoning behind that was. So first of all, I saw that we really started strongly from the bottom with a daily engulfing candle and pushed up during the day quite strongly without any real pullback. And then we approached the 4000 level, which is a even level, was a significant level before, and it also came up to the 200 and the 100 EMAs. And that point on the 1 hour time frame I saw a pullback, and because we were already overextended in the market on all the time frames below 1 hour, I thought this will be the start of a correction, even if it's on the short term, so I closed my positions and I expected a pullback. A pullback that never came. For the rest of the night I was just looking at the chart and counting how much money I didn't make. Anyways, I still think there is time for a pullback, since we're looking at the RSI on the 1 hour, is it way up on the 2 hour, and now we are approaching the overextended level on the 4 hour as well. So if we come over to the S&P 500 index, we can see that there are quite a few gaps still remaining from the past, and as we know that all gaps needs to be filled sooner or later, so I wouldn't be surprised if we meet these and we would come up and test these, either after going down to the 4 hour 200 and just having a correction over there, and then just go straight up and make a little, just scare the hell out of the market and then push down further, because I don't think the market can sustain a upward move in the current circumstances for now. So yeah, what do you think? What the S&P 500 will do in the next month or in the next few weeks? Leave a comment, tell me what do you believe the market will do. I'm quite curious to hear it. Let us go over to a different chart and just, let me rumble a little bit about what I drew and what I think about and what is concerning me right now. So if you think back in time, we had two financial crises since the 2000s. One in the early 2000s, the dot-com bubble, and in 2008, the GFC. And And what I'd like to point your attention to, or direct your attention to, is first of all, in the 2000 bear market, we went down 50%. And after we fell below the 200 moving average on a weekly, it took us approximately 122 weeks to get back up above said moving average. And we just go forward in time and we look at the JFC in 2008 and 9. We can also see that we went down 57%, 58% from the top to bottom. And meanwhile, from the time we fell under the 200 moving average, it took us yet again about 117, so just round it up, 120 weeks in both occasions to get back up and solidify our position above the 200 weekly moving average. And what really scares the hell out of me right now, if we just move the time to our time, if we take a look in that, since the last crash back in March 2020, the market went up 118%. And since then, of course, we came down and then we rallying. But now, even if I draw down only 37%, same amount it came down in 2020, it would take the S&P 500 down to 3,000. If that happened, for example, this Q3, and if we fell below the 200 moving average yet again, and we calculate that time, that would pretty much give us a time frame of end of December 2025 to actually come back up above the 200 weekly moving average. And even though the Fed's still talking about the yield curve seems fine, soft landing, potentially V-shaped recovery, if I weigh up on this one, I don't think so. Because V-shaped recovery can exist when we have a sharp decline like in 2020 March, when the market crashed and we had a V-shaped recovery. However, at this time, the chart looks fairly different, wouldn't you agree? I think the outcome will be different this time as well, and we might as well looking ahead a long bear run. Well, these were my thoughts on the market currently and the update on the Founded Trader challenge that I set for myself. Thanks for being with me here, thanks for sticking around for so long. If you found any value in this video, please hit a like, subscribe, and hey, tell me what you think. Give me a comment down below. And see you in the next one.